loose financial conditions distort what true supply and demand should be.
Got it.
Right? And excess money can come from the government. But in this case, excess government money went from the government into the hands of individuals who then participated in the public markets, and they distorted what it all looked like. And so there was a lot of purchasing activity that was propped up by what seemed like an endless supply of free money.
Right. So we look at yeah, good.
And so now that money is getting taken out, we don't yet know what the real equilibrium economic growth rate should be, because you have to remember, we have not seen an era without federally introduced spending, without federally introduced forms of quantitative easing since the great financial crisis. So we have been propping up our economy for 14 years straight now. So we have distorted the prices of bonds and fixed income. We've distorted the prices of equities. We've created an asset bubble in crypto out of nowhere. And now we have to do the hard work of figuring out what the real supply demand is in the economy. And we don't know. If it took
6 quarters here, there's 6 quarters of just massive GDP spike there from the preceding quarters, and we have 2 down quarters. Is it going to take 6 quarters to wash this out, or longer, I guess?
No, longer, because what David said is now making the problem even worse. So because Powell was catering to whatever pressure he's been getting, and he must be getting some severe pressure from the White House, people are really fixated on these numbers without understanding basic statistics. So just taking a step back, if you go to the Bureau of Economic Analysis, which is an official website of the government of the United States that posts GDP, the title makes it pretty self-obvious what we're dealing with here, which it says, Nick, you can put it up there. Real GDP, the percent change from the preceding quarter. So things can still go up positively, but still be negative if it doesn't go up by the same or more than the quarter before it. The thing that we really have going on is that over the last 8 quarters, we've had all kinds of very turbulent data that's made the trend line unpredictable. And the most obvious way to see this is actually in one specific subsector, which we'll get to in a second, which is around US e-commerce adoption. You see this one huge spike coming out of nowhere. And then eventually everything has settled back to trend. The same way, I think what we're waiting to figure out is how many quarters does it take for us to get back to on-trend growth in the economy? We had a massive shortfall in Q2 of 2020. We had a massive surplus in Q3 of 2020. We've had a country that's been getting back to finding equilibrium over the last 5 quarters. So we don't really know what the steady state growth should be. This is why I specifically had such an issue with the tone the White House took, which was trying to explain away that this isn't a recession by trying to create doubt in the definition. Instead, I think it would have been much better off just repeating what I just said and explaining basic statistics and actually showing that the country is headed in the right direction, largely speaking, from a really crazy one-time externality that nobody could have predicted, that it's going to take some number of quarters. And so really what you should look at, and Jason, you've pointed to this, is employment and wages, and try to be a little bit more circumspect and overreacting to any one quarter of data. By the way, the Fed exactly just said the same thing yesterday when they raised 75 basis points. They said, we are not going to give guidance anymore because things are too turbulent. We're going to remain vigilant on inflation, but mostly we're going to be very near-term data dependent. So I would boil all of this in saying, let's not overreact to a quarter's print here or there, and specifically the label. I think the White House made a mistake in trying to basically think, we all didn't understand what a technical recession was. I think instead we should just focus on what we have to do to get back to solid state equilibrium. What is the problem when he is dovish? Well, the practical reality is a couple of things. Number one is typically the yields of long dated bonds go down. Okay. That essentially tells everybody else to reprice assets. What does that practically do? It makes the cost of borrowing roughly cheaper. Okay. It makes the price of equities, particularly ones that are far out on the risk spectrum. So specifically, let's focus on NASDAQ and crypto, right? Tech stocks, biotech stocks, and crypto stocks. go up much more aggressively. So what has Powell effectively done? He has synthetically created a form of easing again, right? Like his job at the Federal Reserve, if you think about the money supply as a pipe, it's to shrink the pipe to close off demand to get things in equilibrium. So even though he's doing this, by the language that he's doing, he's effectively allowing market participants to basically guess that the worst is over and now we're going to start to expand the pipe again. And so they go to the end state. So what he effectively did in one speech is basically put a pin at the end of this year and is telling the markets, I'm mostly going to be done. And if anything, I'm probably going to be cutting in the back half of 23. Go on your merry way.
And there is no CP.
So the problem with that, Jason, is it's now pushing the problem out another 8 quarters. Like, we need to stop this nonsense. He needs to be definitive, and he needs to fundamentally break the back of inflation so that you find out what the true demand is in the economy. I think we have to see the forest and the trees here. And there's one good part of this bill, and then there's the kind of more ugly reality that it avoids. The ugly reality is, unfortunately, or fortunately, or maybe without taking emotion out of it, we are dependent on fossil fuels for a very long time. It is a necessary bridge fuel. And so we need to, if we're talking about energy independence, it can't happen without us, frankly, drilling more and subsidizing the capital incentives of private companies to go and do this exploration work, which they have stopped, Jason. And the reason they've stopped is that they don't trust that these oil prices will stay this high. And so they don't want to make these outlays and investments for the next 5 to 10 years because they're worried that it's going to be a rug pull, which did happen to them in the back half of last decade and the early parts of this decade. So they're like once bitten, twice shy. They're not going to touch this stuff.
So you're saying,
so the United States government may impinge on their ability to actually process it, that there may be tariffs and costs and taxes that they don't
they'll be upside down.
Forecast. They'll be upside down. So they just don't want to be. And right now, and you saw this, I don't know if you guys saw it, but like Shell and Exxon, and these guys are printing enormous record profits. So their incentives to change the status quo right now is zero.
They want less supply because then they can raise prices.
They have the perfect situation right now, which is it's an incredibly energy intensive world we live in, and we don't have nearly enough energy to do the work that needs to get done. And by the way, and you saw this week already, where Putin cut Nord Stream by another 50%. It was already running at 40% capacity. He cut it down to 20%. It's only getting worse.